What's up traders, Amber Gwendolyn here with the Traders Corner, bringing you guys another in-depth trade breakdown video. Today we're going to be talking about the trade I took on NAS on the 21st of December 2022. I went long and just rode the coattails of that short-term Christmas rally. In today's video, we're going to break down the preparation that went into the trade because I think that's pretty important, as well as the trade itself. I was able to get in with a pretty aggressive entry, didn't wait for a break of structure or a change of character or market structure shift or any of those things. I just saw the level, saw the reaction, and was pretty much just ready to go. If you guys are enjoying the videos, be sure to give it a big thumbs up. If you're a trader or investor, consider subscribing as we make videos on these topics regularly. And without further ado, let's hop on into the charts. All right, now hopping right into the trade sheet that I had, my daily report card. Essentially, my narrative was bullishness. Bullish continuation after reacting to the daily bullish order block yesterday. Lunch hour tagged H1 FEG. H1 and M15 order flows are in sync, so my strategy says to look for longs. I mean, this is just following the reaction from the daily bullish order block. I was just looking for some continuation. For my intermarket analysis, Dow is the strength leader, S&P is in the middle, and NAS is the weakest. This is because Dow ran buy-side liquidity above Thursday's high, the S&P ran buy-side liquidity above Monday's high, and NAS has only run the previous day's high. So essentially, with NAS being the weakest market, that means that I need to just kind of be on the ball in case we aren't going to continue with as strong of a bullish push as say in the Dow or the S&P. My movement hypos coming into the day were the pullback into the M15 order block at 11.329 and a continuation higher into 11.410. I was also looking at a break below 11.305 and a continuation back to the previous day's, that should be a low, back to the previous day's low at 11.247. I could see getting long on an M1 rejection of this M1 imbalance within the M15 order block. So I was looking for price to come back towards closer to 11.320. My areas of interest, I said they are listed above, and then today's trade plan. Look for long origins and source code entries into Monday's high. So the origins and source code entries are just my entry models. Maybe one day, perhaps, I will break them down for you guys. If you drop it below in the comments and let me know, you want to know what this origins, what the source code, what this stuff means, just drop it below and then I'll drop a video for you guys. So look for long origins and source code entries into Monday's high. Be aware of NAS's tendency to drag on the day and be ready to close if we can run buy-side liquidity. Can choose to leave a small runner, 10% of the initial trade volume, to the daily FEG. The runner would need to be managed as a trade to hold. So everything was already in place. I already knew where I was looking from. So let's get into the trade itself. Now I am working through a demo account on Thinkorswim. Excuse me. I'm working through a demo account on Thinkorswim as I try to get used to interacting with the platform and putting orders on that platform. It's a little bit different than TradingView. It's a little bit different than MetaTrader 4, MetaTrader 5. It's different than Oanda. It's different than everything that I've ever used, to be honest with you. So coming into the day, I don't have this marked off. The trade hypothesis formed after the shift of delivery right here. So as price broke above this order block here, right, we invalidated that price level. I was like, okay, now I can look for longs on the aggressive side. So I initially got in long 3 contracts off of this little fair value gap right in here. Right after we broke that high with that bearish candle, we created that fair value gap. I was in on the next candle at 11.334, which was interesting to me because that was a level that I had targeted as buy-side liquidity in a previous session. So I was like, wow, it's really interesting. Now we're using resistance turn support. So 11.334 was my initial entry. However, instead of placing a stop order, I placed a limit order and it swiftly took me out of the market at 11.334.50. I immediately, as soon as I figured out what had gone wrong, what I did, I just got right back in the market with a market execution, and that put me in at 11.337.50. Somewhere in here. Price came up and we pulled back. When we tagged into this afternoon opening price, I thought about adding here, right? Because my idea was well, I believe that these lows are going to hold. If price comes back to test those lows and rejects, that could be another scale-in entry for me. But that's not currently in my protocol. That will be something that I'll have to work on, is additional entries and how I want to scale into a trade when I'm still in drawdown, right? It's different scaling into a trade when you're a profit. You can move your stop to break even, but negative scale-ins when you're in drawdown, I'm going to have to work on that entry model. as well as how I'm going to employ risk for accounting for potential adding into drawdown, right? This was like a 0.79% risk. It's like $79 worth of risk. So it wasn't my full 1% risk. So I could have actually scaled in here on this rejection. Then price starts moving in our favor. We get, I'm just going to delete this for a second. We get this this M1 FEG that breaks these highs here, and then there's a volume imbalance. I was looking for price to come back and fill the volume imbalance before going higher, so I actually did not get in on this scale in opportunity right in here, which would have allowed me to actually, again, I wouldn't have been able to put my stop at break even because we had this M1 fair value gap with the order block, which we could have easily come and tagged into that. So I was just waiting for a deeper pullback, and we didn't quite get that. Now price gets up to my initial target, because I like to target the lion's share of the move. I've had so many times, dude, so many times where I'm looking for external liquidity to get taken out, and then it just doesn't, dude. So instead of like going for external liquidity, I'm going for the quote unquote lion's share, right? Where I'm just looking for the majority of the move in which to take off my position. So I targeted internal liquidity here above these relative equal highs on the M1 at 11,270, and then I was long 3 contracts, so I closed out 2 contracts and I left a runner. Now this is where things get kind of weird, because trading on the futures, you can't really, depending on the size of the trade, right, is how well you can manage your risks. So if I'm only in with 3 contracts, the smallest amount I can leave on is 1 contract, which is 33% of the trade volume. Now if we go back to what I was saying before, I was comfortable leaving 10% of the trade volume on, because I had anticipated that I'd be able to scale in. However, I just didn't do that, right? So getting into this area, right, with a failure swing at this 11,410 level, as NASDAQ, or excuse me, as the S&P and the Dow actually ran quite a bit higher into their buy side liquidity, we kind of had this failure swing, and I was like, okay, if we start breaking down, I'm just going to get out of the trade, because I don't know how far this pullback can go, because I still have an area of interest way down here at like 11,340, right? It's like, dude, why would you, like, I'm not going to hold my position open just to see it, try to see it come up higher when it didn't make sense to me. So I closed the last contract at 11,376.25, and then I was out of the trade, and you can see ultimately we would have stopped me out on this breakdown down here in the PM session. So that was the trade, just riding on the Santa Claus rally. And then if you guys missed it, we ended up having a huge drop the next day. Ooh, dang to my TP2. Wow, beautiful reactions. Huge drop. So that Santa Claus rally did not actually stay a rally, but it was a good trade nonetheless. And once again, if you guys haven't yet, be sure to hit that like button, subscribe if you're new, and until next time, take care.